All right, all right. Happy Friday, all you devils out there. Sam with you here. It is coming up on noon for me here in Austin. Of course, we're going to look at Bitcoin. Now, before we do, just a quick reminder. I have to do this every now and then. Just we've had a lot of people joining us of late, and then some questions about how to get access to the white belt, etc. So, just a reminder here. If you come over to our site, and the link is directly below the video in the description, TradeDevils.com. If you come over here and you click on plans and pricing, well, you'll get access here to all of the information about the 3 plans that we offer. And I just remind you that you can always join us for free here if you want to kind of get a feel for the environment. That'll get you access into our members Discord and to the site, and it's on the site where you get access to the entire belt system. But if you're a free member, just a reminder, you do get access to the white belt. So as you're looking down here through all of the things that are available to you, just a quick perusal down here of the on the free membership here, you'll see you're going to get all the public videos that are early release on crypto, the crypto deep dive analysis, the introductory course, which is our white belt, so all belts get access to that, and then a few other things. You will get the Elliott Wave cheat sheets, some of the things that we have for you as resources on your journey and your education as a trader. So I just remind you of that because it's and again, the belt system is on the website, not in the Discord, right? Just for those of you that have been asking about that lately. Okay, so there you go. Well, free. I don't want to discourage you from social or educational if you're interested in any of that. Right? Difference being between social and educational. Educational gets you full access to the belt course. The social gets you access to the majority of the material in all the trading rooms with the exception of all the belt content. All right, so there you go. There's my little promo for the day. So let's move on. Let's take a look back up on Bitcoin here. I thought we'd look at it through a different lens today, which we'll do here in a second. But let's just start here on our daily, right? So again, just revisiting here. There not much change here. Now, granted, we're getting a little bit of a pop today. Last day or two, we've got some green shoots here, but really you'd have to call us pretty much still contained within a trading range here. And again, just a reminder here, all I've done here, this is just the volume profile for the swing down, then the swing up, and the green line here, I'm just drawing out the 2 points of control to give you that little area here, and it was the dip down into that gave us our first entry. Still have orders below, as I do still think there's a chance that 9,200 is going to be in play. I'd love to be wrong about that and just see this carry on, but we don't want to eliminate that possibility just yet. So as we sit here now effectively going sideways, despite the little pop that we're getting today, it's kind of back and forth with a member. You guys know the Gann man. He's really become just an outstanding trader and a real he would beg to differ, but I would tell you he's really developed an expertise with Gann. He considers himself still a student. But anyway, he and I are going back and forth as we often do. He's sharing Gann material with me and me sharing some of the things that I have to share with him. We're looking at these trading ranges and both started talking and thinking about how Wyckoff's approach might be appropriate to this. So we're again sharing some content. We went back and forth, and it made me think that perhaps this would be a good way to approach what's happening currently in Bitcoin here with a Wyckoff approach to it. Which now, if you're not familiar with Wyckoff's approach, interestingly, he was putting out his content very close to the time that Elliott was producing his. And just an excellent resource for it here. I'll just show you this. This is on, I guess you can't see I guess you can't see the URL, but it's stock charts. So I just get you up here. So stockcharts.com, and I think if you just go to, what is it, school. So it's school.stockcharts.com, and then Wyckoff method. I think if you came here and just Googled Wyckoff method within stock charts, it would come up. Very much worth a read. You'll notice there's a lot of overlap between his approach and Elliott's approach, which is interesting, and it's a very logical based approach that Wyckoff brings to it, very much about how large hands and small hands interact in the marketplace. So I won't walk you through all of this, but this is a great resource to have, and we're going to talk about these trading range schematics as we go through accumulation, trend, and then distribution, and some of the little abbreviations as I'm going to use them here today on our chart here. So some of those you may not recognize just by their abbreviated versions here. But so if you needed a reference point to any of this, it's all here for you. And then I'm just going to use these images to show you how that's relating to what's happening in Bitcoin. So great resource, and really, a very valid approach to the market. And again, what you're going to find is it's an interesting combination of Elliott's theory of the market moving in waves, 5s and 3s, which if we boil it down simplistically, that's essentially what it is, with price action theory. All right, market moving through supply and demand, and then recognizing how the larger players in the market are consistently benefiting from the lack of insight or experience, of retail traders, and not to be critical of shit. I'm a retail trader, right? We're all retail traders, unless you're working with an institution or a hedge fund or a large company. We're all retail traders, but the reality here of how the large players hand off back and forth, accumulate and then hand off, but with retail, is really an interesting study. So I couldn't recommend this any more highly. It's definitely worth familiarizing yourself with Wyckoff's theory. And as a matter of fact, I'm thinking of it as a supplemental course that we're going to offer within the Trade Devils resources here. It might be a standalone course just to get you familiar with this, and we'll take a look at how it works. Again, it's very logical, so it will appeal to those of you that try to extract logic out of the chaos of what many will tell you the market is nothing but randomness. But there is a very logical methodology to it here that I think will appeal to many of you. So I want to encourage you to consider this as a resource. Okay, that said, so let's go over here. Now I've taken the time here to draw this up with some Wyckoff abbreviations on this. So I've got an 8-hour here of Bitcoin. Here again, I'm on Bitstamp. Because we've been in just essentially, we get one trading range here, then we get another trading range here. Right now, effectively, we have another trading range. Let's see if I can draw it. We've got another trading range right here. All right, so it's range, range, range. Right. So we just natural staring at the chart as much as I do for Wyckoff to kick into my head, and then again back to that conversation I had with the GAN man, and he and I are looking at this going, well, goddamn, that'd be damned if it's not right spot, damn near spot on. Now, just like Elliott, to expect it to be, perfect to the schematic, you don't need perfect to make a reasonable trading decision here as I pull these off now. So as we look at it here, we don't have a trading range that we base from, really. I mean, I suppose you could talk yourself into there's some sort of a range being built here, and then we launch from that. But if we come back to the Wyckoff here, this idea here where we have accumulation, then we have trend, then we have distribution, and then markdown, and again, as to how far that goes down remains to be seen. But putting that in the context here, so we get the spike down here that creates this reaction. So we actually come off the low in trend mode here as we're getting the big spikes here, retrace big again. Wyckoff was, just like Elliott, was an advocate of describing the market as moving in waves. Right? So as we go through this trending period here, you can see how this could be classified as moving in waves, right? Just as Elliott would suggest it as waves, right? Waves, and then we go into trading range, right? Trading range. Well, it's where we can identify the Wyckoff method here. We can use his framework, I'm going to use it that way, for how to deal with these trading ranges and what to anticipate. So there's a bit of good news, bad news here. So as we look at this through a Wyckoff approach, all right, so as we come into this trading range here, and again, I'm going to move through these quickly here. You're not going to know all of these abbreviations here, members, because we've not done any trading on this. But it's a relatively straightforward idea. So as let's see, do I need a marker for this? Well, maybe not. So we come up here, so we have the preliminary supply here, we get a reaction, then we get a buying climax. Now, this gets often tied to volume here. So as we see, let's do... I guess I'll have to do this. So as we see the spikes in volume here, as we're approaching this on this volume, so here's the buying climax, and we do it on high volume. But then we get what Wyckoff would call the reaction. I always just call it, he got automatic reaction. Right after the buying climax here, we get the sell-off, the reaction to that climax, right? Then we come back up here, we get secondary test. Now we get an upthrust secondary test here. Then we get this long lingering kind of drift down. Then we get the last point of supply. Then we get something that he would call the creek, where the market is just going sideways, and then it takes a push to get over the creek. Then we get the breakout and we move higher. Now I know I'm going fast through this because I'm trying to not bogged down in trying to identify what each one of these are. It's again, that's why I refer you back to stock charts to go through what each of those little abbreviations are as we get them here, right? Secondary test, preliminary support, selling, climax, automatic rally. It's all over here for you. And again, I would encourage you to do that. But now it is important that we factor in the volume as we're looking at this. So what I'm suggesting to you here is that we've got a Wyckoff accumulation here. After we have the initial trend coming off of the low, right, which just spikes down and is rejected. So as we come off of that, now we go into this trend where we have the classic, and it's relatively close. Let me see if I can bring this back here. Okay, so here is the accumulation schematic that you would find on that same page here, where we go into this trading range here, and then eventually, so here's the climax, automatic reaction, secondary test. There's two different ways you can look at this. We don't get the spring here. We don't get the push down for the low. We get the secondary one here. So we have this reaction, our test, we're in the range, we get the last point of supply, and then we get the breakout. Well, now just look at that. Okay, relative to what we get here. I wish I could put them on the same page here for you, but I can't. Well, let's see, maybe I can do it this way. No, it's not going to work. All right, so here's the reaction. Here's the test. Here's the upthrust test. Now we get back over here, last point of supply. So if I bring this back over here, last point of supply right here, and then we crank up and we break out of that range, which is exactly, here's the creek, as he would call it. Then we go up to the breakout. Now we push up and we get good volume on that push up, right? So here I like to use both the volume here and the Weiss wave. So you can see that on that push here, we get all of this volume here that accompanies that. Now we go up here and we get a buyer's climax. Now this is the transition. Oh God, this is going to be hard to do without any prior training on this, but so as we go into now we develop a new range up here, which I've just highlighted here. I'm just using the channel tool. I've just taken out the center line. So so I could color code this. So I get another range up here at the top. Now let me see if I can bring this over here so we can look at this. All right, so here would be, now look at this range right here relative to the schematic. Okay, so we get an upthrust, and then we get a secondary upthrust and a test here. They're testing the demand here. Is there supply here? In this case, it's the breakout down. So after that upthrust to check, right, we're testing, is there supply up here? Well, down it comes. So this is the idea behind that distribution. So here it is exactly from the schematic. Here's the upthrust to test down here, then we sell off, last point of supply, then we get the sell off. But what's interesting here is that what do we sell off to? Right to where we broke out from. Right, we come directly back to it. So the prior support, the prior demand zone here was where we drew it out initially, right? This becomes the support. All right, so now this is where it's a little bit well, not confusing, but somewhat surprising, and we need to be on alert for this. So we essentially have the breakout from this range, then we go into the distribution, then we go into the sell-off. Now we're going sideways again. Well, it's very tempting to look at this and think, well, hey, shit, man, so it looks like that's ready to break. So we've broken this trend line. We've got this little range here that it looks like we're starting to break out from. And if you really zoom in on this, yeah, you've broken that trend line. Now, it's not a big break with a close above the trend line. We did actually get a close above the trend line, but now we're kind of selling off about it. So it's not enough. Now here I am on an 8-hour. It's not quite enough to really lock and load on, bulls in charge, particularly since we're running into some very predictable resistance points. So we can look at it just from a price action point of view. All right, so here we sit running into the prior structure here. All right, so here, low, here's the little upthrust. Here's the upthrust after demand. Here's the upthrust after demand. So as we look here now, and let me bring you back here to our schematic. All right, so what does that look like? Let's see if I can bring it back down here. All right, bring it in here. Okay, so here's the initial upthrust. Now here's the upthrust after demand. They're testing, testing, testing. Now per Wyckoff's theory, this is part of the distribution. So if I pull that off to the side now, and we just focus right here on this section. So let me bring it in here. All right, so let's open this up and take a look at it. All right, so here's your selling climax. Here's the automatic rally reaction to that climax here. We come back for, they're testing down here. Look at the wicks. We're testing. Sign of weakness, but it's rejected. Now we get our upthrust. Now we come back down. Last point of supply, secondary test of point of supply. Now we get an upthrust after demand, but look where it stalls, right here. So now look at that relative to this right here. It seems to be implying that this is more distribution, and down we go, which would be consistent with what you'd anticipate in the larger context of Wyckoff's theory, is that we would move down in a series of distributions. So upthrust distribution down here, this is redistribution before it would go down again. So the implication applying this theory, right? I mean, it's just theory. Well, let's see, I want to do it this way. Nothing is written in stone. Let's try again here. All right, so if I do it this way, it would suggest, now let's put that in, let's put it in green. Let's fatten that up a little bit. All right, so okay, did I get that? Maybe I didn't. Here, let's try again. One more time. There's that. There's that. And I want that in green. All right, let's put it in, oh shit, let's put it in white since it's unclear as what we're heading here. So if we're distribution now, we come back here and the market's not sure. It wasn't enough here. This is a pretty good sell-off. But if this is one more redistribution here for strong hands to be laying off inventory to weak hands, this is setting up for a sell-off. God damn it. Swear to God, never one click. This is setting up for this kind of reaction, right? That's what the schematic, right, would imply, right? Here's the upthrust, down we go. Sign of weakness is what you'd be anticipating, yet we're rallying up. What would be much more rare, and while it's, rare doesn't mean it doesn't happen, what would be more rare is that after this accumulation, we went through a distribution phase, then came down here and went into reaccumulation before kicking higher. Right now, is it possible? Of course, right? It's not that it doesn't happen. It's just that it's less likely. So could this be fashioned into a reaccumulation? Well, it could, right? There's much like Elliott. There's some pilot interpretation here in terms of how you might read this. But right now, it's literally textbook in terms of the upthrust here for a secondary test before coming down. Now you say, okay, well, all right, that's a whole lot of shit you've never talked about before. How does this help me? All right, we'll slow down. Now let's put in some things that you're very familiar with. Okay, so let's just use a straight algo pull, right? So from our low here, what are we bumping into? All right, bumping into the 50. Now we could upthrust even higher here, like look at this one. So we could go up here, right, bump into the golden zone and then start our sell-off, right, easily, right? And it wouldn't, you wouldn't have invalidated the theory here that we had a redistribution happening here before the market goes down. So the fact that we're running into this at both structure and the 50 from the top might make you pause and say, well, slow down, bulls, right? It's not listen, I'm as big a bull as anyone, but we're not ready to break out the bullhorns just yet. Now, look, secondarily, on top of that, and I think I showed this last week, if we pull right here, well, we've got this nice little cluster here between the 50 from the top and then the golden zone from the secondary. So we've got pretty stiff resistance up here that this is going to have to get through. So just wicking that off here in this range here, let's put that in there, fill that up a little bit, right? So there's some stiff resistance that's got to get through, not to mention the price action, right? So we know this was prior support, so there's going to be sellers here defending. You don't have to wonder about that. I mean, we just look at the chart. That's clear as can be, right? There's going to be, again, doesn't mean they can't get through, but we can understand why it's bumping its head there. Now you think, okay, well, so here it looks like stimulus is coming, as I've been saying. Well, members, you know this. I've been saying this for 2 weeks, right? There's no way it wasn't going to happen prior to the election. They're political creatures, and they each see benefit in getting it done. So it's going to happen. Now, but it's a lot of talk about when it's going to happen. Doesn't matter when. Just the threat of it happen. Well, threat, man. Just the idea, the talking points that it's coming is enough. Look at the market today, right? It's just, look at gold. It's enough for it to happen. So you would think to yourself, well, shit, if they're about to print, and I use that term loosely, right? There's no printing. But if they're about to create either 1.8 or 2.2 trillion dollars worth of just dollars out of thin air, wouldn't that be bullish for Bitcoin? Well, yeah, of course it would. Right? Of course it would. Again, we don't have to wonder about that, how the market would react to that long term. But short term, well, just looking at that, do you want to buy into that? Right? Because, oh, stimulus is coming, that's bullish for Bitcoin, I want to buy that. Do you? I don't, and I'm a raging bull. I wouldn't go near that on the buy side. Now, that doesn't mean that it can't go higher. It just means that as a trader, I'm trying to get used to putting this down here. I don't buy into 50s, right, from major pivots, right? And that's the 50 from the top. I don't. So, God, I've talked about this, guys, for weeks now. We don't buy breakouts ever. Let it. Now, listen. It's not that I'm rooting against the breakout. Don't misunderstand what I'm saying. Just as a technical trader, you never buy a breakout. You wait for that to confirm. So if it's going to stop here, we get this little pullback, and now we're going to go. Okay, great. Wait for the pullback. That's when you buy it. That's the buy. Never here, ever. Right? You're just asking to be bent over and butt raped by whales and market makers. Doesn't matter what the market is. We don't have market makers in crypto, but you're asking for it. You are literally bending over in the shower. When you do that, don't. It's a classic retail mistake. Don't ever do it. Yes, you're gonna miss some trades where you say, the trade devil guy told me never to buy a breakout, and look what just happened. Trust me, over time. I wouldn't tell you if I hadn't done it more times, as I've said before, more times than were required for me to stop doing it. But I'm stubborn, so I kept trying it. All right, now this is years ago, right? But trust me, I've tested it. There's no need to ever do that. If it's a legitimate breakout here, right? Just think about what are large hands going to do? They're going to go up here and see, okay, are we safe? Right? I use this analogy all the time. Are we safe? Is it safe? Safe. Right now, this looks like it's primed to come down. And then the Elliott count doesn't really support the breakout here. Now, I know, just basic TA, you're looking here, hey, I got higher highs, higher lows. Do I have a higher high here? Not yet. Do I? Well, here I got higher lows, right? That's all good, but I don't have a higher high. What I have right now is a double top. And if I'm applying, again, back to apply a little Wyckoff to this, well, we got declining volume, right? So that's that can be misleading here. But the fact that we're getting on the sell-off. So if you look here, oh shit, let's do it this way. All right, so if we look on the sell-off down here, right? So here's where all the volume is on the sell-off, right? So they're dumping. This looks like distribution, right? Distribution. They're big sell-off here. They're dumping. Now, for this to go up and break out of here, it's going to have to do that on some substantial volume. So this is going to have to kick at the same time that this kicks, and we've got multiple structure that we've got to get through here. So we've got all of this to get through, not to mention the 618 from the pull above, right? This one is the big one that's got to get through right there. So don't assume, oh, we broke the 50, it's off we go to new highs. Right? That's the next thing that's going to have to test. Right? Now that could set that up, which could set that up, which could set that up. Right? Now we're on our way. But right now, this is very suspect. I would not buy that. And I'm always looking for places to be a buyer or to advise you guys to buy. I just would not buy that. You're going to have to wait. I know that sucks, right? He's like, oh shit, here it's coming. Stimulus is coming. If you're a technician, that's a low probability event right there, to be a buyer right there. Now I would encourage you to do a little study of Wyckoff's material, right? It's really quite, again, it'll appeal to the logic in your mind. So study this and understand what's likely happening here. Now, again, it doesn't mean that we must now sell off. That is not what I'm saying. The market doesn't have to do anything. It's just, where are these patterns that are prone to repeating? And then again, I come back to, while this could be reaccumulation, right, from this accumulation zone, it could be a reaccumulation. It's just the least likely. So do you want to trade on least likely? Well, I wouldn't be opposed to it, but we're going to need to see the big break. Got to break up, come back and test it, and then go again. That's the next buy. Until then, this remains vulnerable to be coming down. Let's go over here and just quickly check on the Elliott count, if I can remember where I put it, which I think is over here. All right, this is what we've been looking at for the last couple of weeks. Now here, take the Wyckoff off, right? Oh, Wyckoff off. Okay, so W. Now, is this the X? Well, if this is going to break higher, we might have to move the X over here. Now we're looking at this. You know, this is just the reality of Elliott, right? So as the market reveals more of itself, if this could be our X, well, now we're still looking like that. But we're not there yet because we're just bumping into this resistance up here. Now, granted, yeah, we've got a little break of the trend line, but you'd want to see that break higher. That's really not the break you want. You want a break, and then we want to come down and test like that, right? But this potentially now is there to get relabeled. Oh, you could. It still looks like a 3. This is the 5. This is, I highlighted this last week. This is what gives me pause, right? How did we reconcile that 5? That is so clearly a 5. How do we reconcile that? All right, are we going to have to truncate the C here? Shit, maybe, right? But I don't think we're back here wedging a 3 into that. That's a 5 all day. So how do we account for that? The B could end up over here, right? A, B, C into the B, maybe, right? We're not through that pivot yet, so it's still possible that we've got an A, B, C here, and now we're coming down here if this is the X, right? If it's WX, if that's going to play as our X, as our X, then I got an A, B, C coming down here. So you might we'll just note here, if I take this off, we're just hitting to the tick. The running parallel, right? That's the 50 off of this parallel. So I wouldn't delete that, but let's hide it. I'll lock it and hide it. All right, so what else might be at play here? Well, you got to do a little experimentation and see what looks right. So obviously there's this that's going to be in play, right? So we're going up here to look for that. Again, I stay with the shift because right now this reads to me as being corrective. Now, if it starts to look impulsive, well, then I'm gonna quickly switch to. Oh, is that gonna do it? Yeah. Then I'll switch here. But look how far outside the edge we are here. Don't like it as much there. So that still looks like, and because I think we're in a trading range, this still looks to me like we're. I don't know what I want here. I want shift here. We want to stay with shift until that breaks out of that here, and that might be back to revisit in original recipe. Right now, still looks like that's corrective. Right now, it could change quickly. Right, the market reveals slowly. Right, if it's going to pump and go. Oh, where's my little thing? If we're going to really go here, right, great. Come down and retest it. I'm a buyer all day with both hands. Until then, I'm very, very cautious about where this could be going, even though it doesn't make sense. Think of it this way, right? Here's the one thing that you can almost always count on. There is no easy trade in the market. It doesn't exist. Right? So as soon as you think, oh, stimulus is coming, they're going to print $1 trillion. Well, that should be bullish for Bitcoin. Well, long term, yes, but what the market is always trying to get you to do the wrong thing at the right time. So you're thinking, oh, the stimulus is coming, that's good for Bitcoin. What the market is more prone to do is go down first, right? Whales, institutions, hedge funds never, and I repeat, never pay retail, ever. They'll drive it down. They'll pass on the trade, or they'll do everything they can to get the price to go down, put it on sale. Right before they're going to go heavy. They just won't. They don't do it. They don't have to. Whales could easily drive this down because what does the retail think right now? Oh man, it's coming. 100K Bitcoin it's coming. That's exactly what all of crypto. Well, not all of crypto, but I would say the retail crypto trader who's not been in the space for long is already starting to think. They're already spending the money. Careful of that. Right, the market wants you to do the wrong thing at the right time. Always, always, always. All right, so be careful. Don't buy that. Well, let me rephrase that. I wouldn't buy that. All right, if you're comfortable buying that and you want to trade the breakout, have at it, man. It's just I wouldn't buy that. All right, for what that's worth. All right, so there we go. 27 minutes. That's a bit longer than I thought. I take you back to here. This is a great. Read it. I wouldn't steer you here if I didn't think there was value here, right? You get 4 different types of, there's way more to it than is here, but this is a good resource, right? And just track this out. You can download these images, keep them somewhere. As you come across a trading range, start looking for it. Start looking to see if you can identify all the components of it, right? Just as I've done here, right? It'll start to make sense to you. All right, guys, I think it's a bit of hurry up and wait here to see how the market responds. Until then, all right, good time to be studying. I'll take you back here. Come on, join us. All right, you'll get some content out of that. I promise you. That white belt, it's not for lightweights, right? People think it is. No, it's not. That'll challenge you. All right, guys, that'll do it for now. Members, I'll be back. We've got some alts we're going to look at, but those of you on YouTube, we'll catch up with you next week. Okay, have a good week.